Hello, everyone, and welcome to the last masterclass of our Capital Conversation series. For the last several weeks, we've had special guests as well as myself discuss the capital raising process from start to finish. And this is our last class number 7, where we'll briefly discuss what types of investments are out there and from whom. These mini courses were meant to give you just a taste about what it means to be in the capital raising world. And hopefully some of you will become dedicated clients of ours after this so that we can help you become the most attractive to companies. So, of course, I am Darshan Kendrick, the founder of Darshan Speaks, where we transform growing companies into attractive companies for investors by concentrating on 5 key business areas. We concentrate on your foundation, on your framework, on your financials, on your forward thinking and scaling, and also on your future. And so these mini courses are meant to help you become those attractive companies. About me, I'm a 15-year plus corporate securities attorney where I've helped companies nationwide raise billions of dollars in private investment funds and save them millions in unnecessary court costs and fees. And so I'm a business coach, I'm a lawyer, and I'm a public speaker. So I always like to start these off with a story. So I had a 1-hour consultation with a client, and this client was in the biotechnology industry, which is a capital intensive area of law. And after the consultation, the client was able to clearly see that using Regulation CF was not the option for them. That's national crowdfunding, Regulation CF, because biotechnology is a very capital intensive endeavor. And so under Regulation CF, you can only raise up to $5 million, and they needed way, way more than that. So after our consultation, we laid out all their options, narrowed it down to a few, and they walked away knowing exactly what their financial strategy was, how they want to raise capital, the investors that they needed to target, and all of that. And so they were able to go on and do a raise. And instead of soliciting those individual investors, they really focused on venture capital firms because they needed so much money up front. And venture capital firms and private equity firms, I could do a whole course on that, but they were able to target the exact investor that they needed to target because we knew the type of investments that were out there and who they needed to specifically target to get that type of investment. All right, so if you have any questions, you can drop them down in the comment section of this video, and I'll be happy to answer those for you. So let's talk about the types of investments and from whom. Okay, so first we have what we call in the industry the 3 F's: family, friends, and fools. So this is really pre-seed. You have an idea. You need to do some research and development. You need to see if there's a market out there for it. You haven't made your first dollar. Really, crowdfunding is probably the best way to do that. There's some updates to the rules that allow unaccredited non-wealthy investors to contribute towards your endeavor. So if you're looking for a pre-seed, so if you have an idea but you haven't proven it in the market, crowdfunding is probably going to be the best for you if you keep it under a certain limit. There are 2 types of crowdfunding. There's national crowdfunding, which I mentioned before, which is called Regulation CF, and then there's state or intrastate crowdfunding. Like in Georgia, we have what's called the Invest Georgia exemption that allows you to raise capital from Georgia residents without nearly the amount of compliance you would need to do if you did it on a national scale. So if you're going to raise from family, friends, and fools, your pre-seed, then crowdfunding might be the best way for you. So if you are pre-seed or seed, meaning you have proven it a little bit in the market, you've done a little bit of R&D, but now you need to build out a little bit more. You can still raise from family, friends, and fools, but then another group that you might be interested in is angel investors. And there are a lot of angel investors if you look hard enough, particularly here in Georgia. All angel investors is wealthy individuals that have money to invest in you. That's all they are. Usually they're accredited investors, people who can give unlimited amounts, but sometimes they're not. So if you're in that seed phase where you've proven concept, you have a proof model, you have something that you can show that is going to be successful in the market, and you need that seed capital, You can do family, friends, and foods, but you can also add on angel investors. And there's many groups that you can pitch to, depending on where you are located. But in any major city, particularly here in Atlanta, there's groups like that. So you can use crowdfunding that we talked about before, or if you're early stage enough with a really good plan, a solid plan for growth, you might even be able to go to venture capital firms. Again, I can do a whole course on that. But they are interested in investing in high growth, really early stage firms and companies. So venture capital firms might be an option for you, but a lot depends on if you should go to angel investor route, family and friends, or if you should do the venture capital firms, because each one of those are looking for different things and have different networking way that you access them. But that might be an option as well. So if you are doing a Series A round, which is you got proof of concept, you post revenue, and now you're growing, and you just need more revenue in order to grow more because you're on the trajectory of growing more, then you can get more sophisticated and wealthier investors to invest in you, and possibly institutional investors, which are, pension funds and all these institutional investors that might be able to invest in you. Again, you might be able to go back to venture capital firms, and they may invest in you, just depending on a lot of factors. And then once you get really, really on high growth, then you might be able to later, if you need a capital infusion, go to a private equity firm, which has a different set of sort of things they're looking for. They're a lot more involved in management. A lot of times they'll come in if you're distressed. The terms are different. But if you're later stage and after you've grown and maybe you've plateaued, then you can start to look at private equity firms. So you'll see that there's sort of a progression and layers of when you need to look for certain investors based on where your business is and who you need to be looking farther from. That is what we do here at Darshan Speaks, is guide you through each one of those different levels. So one of the things that people ask about is the exit. So there's two ways that you can essentially exit a company, meaning that your company is now about to pay your investors back. So the first way the first way that you can exit is a merger or an acquisition. And a lot of times you can do that through an institutional investor or a private equity firm, where they'll come in and they will absorb the company, take over the company, pay the investors whatever the terms of their agreement is through some type of M&A or merger or acquisition deal. So that's one way that you can exit the business. Just give it to a private equity firm. Well, not give it, but sell it to a private equity firm. The second way, and the most popular way that everybody knows about, is an initial public offering, or an IPO, as we hear about it. That's when you go public. There's all these documents. There's this fanfare. You see people ringing the bell on NASDAQ and the New York Stock Exchange, and they are going public, meaning that they are selling that company to the public. So retail investors, what we call individual non-wealthy investors, can now invest into your company because it's listed on an exchange. So you can go to Fidelity or JP Morgan or anywhere of these places that sells public offerings, and you can buy a stake into a public company's business. So people can do the same for you because you're listing it as an initial public offering. So those two exits, mergers and acquisitions, and then you can also do an exit by doing an IPO, which we've heard popular ones like Facebook and Google and all the big companies. That really is how the founders really get so much cash, and how the early investors, like those venture capital firms that we were talking about that invest early, get paid so much money. It's the waiting game. You go public or you do an M&A deal, that's when they cash out. So those are the types of investments, and from whom. If you need to go back through this video and just, sort of re-up and listen to it again, please do. But if we can be of assistance, just book a 1-hour consultation with us, or a 2-hour one. You can invite your home team members, and we can go through this in detail to find out what investment is right for you at what stage and what your options are. That really is what we're here for, is to guide you during our consultation. And by the time you're done, you have a clear plan about who, what, where, and how, so that you know how to move forward before spending all that money. You really do want to have a plan. So If you have any questions, again, just drop them down in the chat. But this is, again, our last video. If you have missed our series, please go to my Masterclasses playlist that is on YouTube and make sure you check out class number 1 all the way to class number 7. And we have some investor ready tips on there as well that are 1 minute, under 1 minute YouTube shorts. But I hope that you have enjoyed this Masterclass series. I have enjoyed bringing on special guests and going through this process. If we could be of any help, please contact us at www.darshonspeaks.com. And make sure you sign up for our email list that has additional capital raising resources, including where you can find capital and do pitch competitions and conferences. And additionally, it has some additional material, just like I'm doing now, that is included in every weekly email. We try to be as valuable as possible. So make sure you go to our website and sign up for that. Invite people to sign up for it who are looking to raise capital in the next 12 months. Growing companies that are looking to raise capital in the next 12 months. Ask them to not only subscribe to this YouTube channel, but also to sign up for our email list. I hope everybody has enjoyed this Masterclass series and this particular video. And of course, if we can be of help at Darshan Speaks, please let us know. Thank you.